Oh, happy Wednesday to you. Happy hump day. Um, Only one more video for this week, and I'm actually rather excited about that. I'm pretty exhausted. This has been such a busy week for me. From starting a brand new part-time job at Intuit so that I can help everybody even better, um, gain more knowledge that I need in scenarios that I may not have ever worked with before. So um, this is a good thing. But yeah, it's got me absolutely swamped to the point to where I feel like I'm almost sleeping in my office. So anyway, welcome. Please enable StreamYard. Click on the three dots on the bottom right hand corner of the video so that you enable StreamYard. That way it enables me to see who is commenting. I do ask, if at all possible, that you comment tonight, and I would be more than happy to answer your questions. Tonight we are talking about payroll. Do it yourself or hire a third party payroll company. When is it time? So, as always, I remind everybody why I do this for two reasons. Number one reason is for all of the small business owners who have been affected by COVID that may not be able to afford a bookkeeper, um, or other reasons, whatever they are. And just because you do not have a bookkeeper does not mean that you should be failing at your bookkeeping or at your financial end of the business. You need to know what your financial health is for the business. You need to know better than what is just in your checking account, because if that's how you're doing your bookkeeping, then we've got a major problem. So, because as we all know, checks don't exactly come out of the bank immediately. So if you are paying by checks and you are just going by the money that's in your account, then you need to contact someone immediately, or you need to be watching these videos. The other reason is for the bookkeepers out there, the brand new bookkeepers, as well as the new-ish bookkeepers that may already be in business. These are to help you gain knowledge, and hopefully, you are practicing some of these in your QuickBooks online sample company. Yes, they are going to uh, go right back to, revert back to where they were 24 hours from now, but it's really good practice. So, as usual, we do a little bit of a review. And last night was a very big night. We did go over by about 10 minutes or so, which is actually less time than what I thought we were going to be going on for. I thought we were going to be doing it for about an hour. So we went over workers' compensation. Why is it so important? And let me share my screen. We're just going to do a quick review. I'm not going to get into everything. We're just going to go into a little bit of it right here. What is workers' comp? It's a type of business insurance that provides benefits to employees who suffer work-related injuries or illnesses. It is there to protect you, the business owner. So if your employee happens to get hurt on the job, you will not lose your business and you will not be sued. Your workers' comp will take care of everything. These are the top 10 industries for injuries and deaths. These numbers here is per 100,000 workers. So you figure logging, that is a very high percentage, and I can understand why. We actually went over construction last night, and there is a major reason why. And these are the risks. We were talking about your direct costs and your indirect costs. The direct costs being the indemnity benefits and the medical benefits. In other words, lost wages as well as what you've had to pay out in medical bills. But the indirect costs as well, which can be the costs involved in having to replace that person while they are gone. whether it's overtime for salaries, reduced productivity, hiring, and one way or another, you have to have work coverage. But the thing that is not mentioned, where is my mouse? My mouse has disappeared. There we go. Couldn't find it anywhere. Um, the one thing that is not mentioned that most business owners do not realize or even understand is that reporting is probably the most overlooked reasons why companies lose upwards of $100,000 in 1 year at one time, because the owner and or employee doesn't understand that they are required to handle the monthly reporting and how that is done. And so we went over that. We went over what a certified payroll is for reporting. And again, we do not want to get this mixed up with prevailing wages. This is specifically for workers' comp, which workers' comp also covers prevailing wage. And we're not going to get into any of that right now, but I can tell you that when you pay out prevailing wages, your workers' comp is going to increase. So I had mentioned creating a spreadsheet so that you can easily keep track of all of the hours. You want to do this during each payroll period to make it easy. So when you are done submitting all of your hours, whether you're doing your payroll or you've got a third party payroll company, which is why we're doing this today, you can easily transition into, okay, this is actually a part of payroll. You have to think of it that way. This is a part of payroll and this is routine. This has to be done every single time I do payroll. And we talked about job codes and those job codes being a part of tasks. What is a task? It is a role in the company. It is whatever the employee is doing for the job at that moment. And again, an employee can be doing 8, sometimes even 16 different jobs in one day. And it can range, for construction specifically, it can range from decking, we'll take it to the extreme. Decking for 30 minutes, painting for 30 minutes, gravel work for 30 minutes, pavement for 30 minutes, and so on and so forth. And every single time they change what they're doing, that job code changes, that price changes. So you have to record every single one of those changes, and those are going to affect how much you're paying for the entire month. Again, for most industries, for workers' comp, you do not have to worry about this so much because what they estimate for the year, you will probably be right on track for that, because the majority of the industries are not going to have 250 plus job codes like what construction has. Most industries will have possibly up to 5, usually less than that. So if you are not in the construction industry, this is not as detrimental for you to be learning. Construction, definitely. Construction is actually the number one industry where reporting ends up lacking. And remember, we actually went into this scenario, a scenario that I actually went through from people that were there before me. And what it was they were reporting it incorrectly. Instead of actually putting it in for the actual job codes that everyone was working, they put it all towards admin, which is the cheapest rate that there is on their job codes. And the company, it ended up being 3 years worth of payroll. The company ended up having to shell out a whopping $90,000 in back payroll and fines. And those were lump sum. They were able to get a payment plan going, but they had to have it all paid off within 6 months. So you figure in 6 months, $90,000, they were paying $15,000 a month to get up to date. And of course, they had to have workers' comp audits every single year after that, sometimes even more. So you do not want to be in that position. And that's why we had this lesson. And of course, we went into the calculation. We're not going to get into this today. It is complicated, it's lengthy. I had actually advised you to go to my website. If you go to www.misselsiesbookkeeping.com, click on the blog tab, and it's actually the very first blog that's there. It's a very lengthy blog post, and you'll be able to get a lot of information from that. Okay, so now that we are done with the review, okay, we're going to get into the meat and potatoes, as I like to call it. Payroll, do it yourself or hire a third-party payroll company. This goes together with the workers' comp. So what's best for your business? There are so many different scenarios and so many different things that play into how you're doing your payroll. These are some questions that you really need to think about. You need to ask yourself these questions. Are you a sole proprietor? Well, if you're a sole proprietor, that's an easy answer for you right there. You shouldn't have a payroll. As a sole proprietor, you don't have employees. Legally, you cannot have employees. If you are an S Corp or a corporation with 10 or more employees, you might want to consider third party. It's up to you. Are you someone who's finally made it into your own and are considering hiring? You want to look at hiring an employee versus bringing in a contractor. So you get to weigh those two things out. Do you own a company with 50 employees or more? Well, if you own a company with 50 employees or more, I would certainly hope that you're already going through a third-party payroll company. Maybe you have 11 to 45 employees. You've got that gray area where you really look at it and go, okay, what's best? Do you have a ton of benefits? Here's a big one. Do you have a ton of benefits that you offer your employees that all must be tracked? You might not want to put an employee through that. Okay, we're going to go over a payroll comparison, in-house payroll versus third-party payroll company. So the pros and cons of an in-house payroll in-house payroll. The pros are you get to share the resource. So if you have one person that is doing your payroll, the benefit of that is they can train someone else that they trust to do the payroll in their absence. So that is the nice thing. There's full control over sensitive information, and there's flexibility. In other words, if there are last minute changes, they are so easy to make. You don't have to go through all kinds of connections and lines of communication. It's just done. The cons of in-house payroll is there's an additional cost, and that cost is the cost of payroll software most of the time. There are still, believe it or not, some companies that do it by hand. There's not that many left, believe me, but there are some companies that still do it by hand. Most of them use payroll software. And that payroll software can charge you anywhere between $250 a month to several thousand per year. The beauty of that, and the reason why they charge you on a yearly or monthly basis, is because this software always has to be maintained with all of the newest laws. Compliance to statutory changes. In other words, these are penalties for not keeping an eye on recent changes like taxes and funds. In other words, You always want to make sure that you are up to date on your payroll law when it comes to what you should be paying in payroll taxes. For instance, in the state of California, you have to pay both federal and state taxes. Here in the state of Texas, there are no state income taxes. So you always have to be abreast of all of that. And then there's fear of turnover. Who's going to cover the payroll if someone resigns? So, um, pros and cons of a third-party payroll company. The pros are accuracy and paid on time. This is the most critical benefit. Compliance to statutory changes. We were just talking about the taxes and the funds. They always know what the changes are. They're always on top of it. They're always following the letter of the law. Process multiple countries. They know. They work with every single currency type that there is, and they know how to deal with all of that. It's time saving. All you're having to do is record what the hours are, the total hours, and you send it in. No more calculations, no more entering, no more paying the payroll tax. It's done for you. And really good practices. And I'll tell you why. The cons are last minute changes. Every payroll cycle comes with a cutoff date. A last minute change from the client may result in payment to the employee in the following month. The other thing is that if there was a last minute change, that let's use the scenario that the change was done after payroll was submitted and everyone was paid. For instance, someone didn't give you all of their hours and you didn't catch it. Then you don't give them the hours until after everybody has been paid, when that person has realized that they have not been paid for all of the hours that they worked. It is a possibility that you could have fees involved, you're going to have additional fees involved, but there could be other fees involved with having to prepare other payroll taxes. Then there's data security. As always, using a third-party company when you've got data security, it's always an issue. And it takes the liability off of you, which that should actually be in the pro section, not in the con section. Some things to consider. If you have less, and we've got a lot of these, if you have less than 10 employees, you may want to look at doing payroll yourself. However, you must be extremely mindful. Be sure not to make any errors in payroll taxes, because this adds up very fast with fines. There is so much human error involved in doing it yourself, especially if you're doing it all by hand. If you work with employees in more than one state, you must be mindful of the payroll taxes and who they're payable to, and remember to set them up properly. You want to make sure that you have the payroll tax agencies set up in each state. You can still do payroll yourself, but with the aid of payroll software, as I had stated earlier. Companies like QuickBooks, ADP, and Gusto are available. But be careful of some of this self-serve payroll software, as some have awful reporting, may not set up the payroll tax agencies, and may not tell you this. And others may be great, but sell you on all the bells and whistles that you may not need and charge you astronomical fees for them. When I say that the payroll tax agencies, one of these companies actually tells you that this is completely self-serve. They will initially set up the agency for you, but if you end up getting employees that are in different states after you have had them enter all of the initial payroll information, they will not enter or they will not contact the state or set that up at all. That is completely on you. The thing is they are not upfront with this. They will not tell you this. They will hold all of the payroll taxes a in a suspense account for you. Uh, the problem is it will remain there. And then you'll end up getting letters and fines and everything else from the state saying, why haven't you paid us payroll taxes? The other thing is there is a ton of liability when you're doing your own payroll, even through software. The reason being, if you have an employee doing the payroll, there is extreme liability. The ease of the employee of entering incorrect or fraudulent hours is extremely easy to do. And unless you have specific alerts, if it's software, you as the owner would never know about this. So unless you have protocol that you are meeting and you're seeing every single hour that is being reported before they hit send, unless you have that, you never know how much everybody is getting paid. So you could have an employee right underneath your nose that is putting in that they just worked 40 hours of overtime for 2 weeks, and you'd never know it. Or you could see that they are adding fringe benefits or whatever, all these extra things, but because they're doing it themselves through payroll software or doing it on paper themselves, you would never know it, unfortunately. And unfortunately, that is how many companies end up in this predicament. Using an outside third-party payroll company can be a very useful vendor. It's a very useful thing. It takes 100% of the liability off of you, because all you have to do is collect the data, collect the hours, total them up, make sure that they're correct, and send them the hours. That's all you have to do. They do the rest. They take on all of the liability. So if there is a mistake, either it was reported incorrectly or the payroll company did something wrong. If you find a local payroll company that's within driving distance, it's easy to pick up the check on your way into work, and all payroll reports can be emailed to you. And if you have direct deposit and no physical checks, easy peasy. There's nothing more that needs to be done. Third-party payroll companies have the ability to make your reporting benefit you. Are you a construction company with a lot of workers' comp job codes? If so, they can actually put the job codes into your company computer file and sort every single person out per codes, making reporting and paying workers' comp a breeze. So then you don't even necessarily need to have that spreadsheet, but you're still going to have to report those numbers to them. Another benefit of a third-party payroll company is that they handle all of the payroll taxes. You don't have to do anything but submit the hours to them, and they do the rest. They email your quarterly 940s and 941s to you that the IRS requires when filing your taxes, and they do the rest. They have an impound account where they place the payroll taxes in that accrues so that when it's time to pay the taxes, everything is there and ready to go. They stay up to date on all compliance and payroll laws for each state, so you don't have to. And finally, they automatically keep track of all sick and vacation time. So they do virtually everything for you. The only thing that the only thing that you are having to do is strictly reporting the hours to them. That's all that you're having to do. They do all the rest. And for me, I have always worked with local payroll companies. It makes it so much easier. They come to you. Not right now, I'm sure, but normally they come to you, they collect all of the payroll records for the past year or two. Actually, I believe it's the last year, so that they can get all of those entered, and they bring them back. You don't have to do anything else. All you have to do is sign the document. Yes, there is a fee involved, and the fee depends on how many checks, how many direct deposits, um, as well as the time involved and whether there's benefits. So it could range anywhere between uh, $20 a payroll up to a couple hundred. And of course, they do charge for W-2s. Um, so there are a ton of benefits to going with a third party payroll company. It just makes sense. It You have to weigh the benefits. You know, you may not pay as much for payroll software, possibly, but you're still paying a payroll company anyway to do this, and they're doing it all for you, which frees up all of your time to do all kinds of other things and get the work done, rather than having to spend hours, if not days, working on payroll. So you really have to ask yourself what's going to benefit you the best, and really weigh out those pros and cons, because some of those cons are some pretty big ones. Um, so I think that is it for, yeah, that's it for tonight. Tomorrow, the final one for the week, we are going over how to properly track man hours. So again, it all goes together seamlessly. So, 7 o'clock p.m. Central Standard Time, how to track man hours properly. And I hope to see you there. We only have a couple weeks left of this series, y'all. We've got seven more, including tomorrow. 7 more episodes, a total of 25. So, yeah, we're getting there quick. I don't know what in the world I'm going to do videos on after all of this. So, but I'm sure I'll get some ideas, and people will give me ideas to go by. So, again, 7 p.m. Central Standard Time tomorrow night, when we will discuss how to properly track man hours. I hope to see you then. Good night.